Well, folks, unfortunately, I have the unfortunate news to give you. There's going to be massive amounts of layoffs over the next 6 to 12 months. And I want to show you exactly what I'm looking at here, what we're going to be looking at. And I want to share some perspectives on this. And when I do one of these videos, it's not just to scare people or something like that. And you might even look at me and you're like, Jeremy, you're planning on buying, stocks over the next 6 to 12 months. Why would you buy stocks over the next 6 to 12 months if you believe there's going to be massive amounts of layoffs over the next 6 to 12 months? I want to explain that to you guys, because just because you can have a recession or even unemployment going up doesn't mean necessarily stocks have to go down in that sort of environment. And so I'm going to show you guys a lot in this video. It's going to be a very important video. Share this out with family and friends so they're aware of this, if they even care about this, which if you have any sort of job, you should care about this. First thing I want to start out here to kind of calm everybody's nerves, I guess you can say, in a situation like this is, if you go back to the last massive recession we had, right, which this recession we're potentially already in or going to go into, that's a whole debate if this one's going to be worse or less bad, things like that, right? But there's one thing we know about that last one is the market had already started to drop way before people had really picked up on the economy was starting to weaken, right? It happened way before. And essentially we were in a situation where the market was downtrending without a lot of people paying attention. It wasn't until almost fall time of 2008 when the market was already down substantially when it comes to stock market, when people started actually paying attention, you started hearing on the mainstream media and everything like that. You heard about all the job losses and layoffs throughout 2008, and it just seemed like it just got worse and worse and worse, right? But the market bottomed in February of 2009, right? Now, very strange that it just bottoms in February 2009, while the amount of people on food stamps was skyrocketing, the amount of people that had lost their jobs was skyrocketing, the amount of foreclosures and short sales on homes was skyrocketing, real estate was plummeting. Meanwhile, you had the stock market starting to go up. Okay. And so this is why although I'm going to share some awful news with you guys here today, and there's going to be massive amounts of layoffs for the next 6 to 12 months, doesn't mean the stock market's going to be down for the next several years or something like that. Doesn't mean that at all. And that's just if we look at history. You can, in the stock market can lead you to these things way before they happen, essentially, which is something that absolutely blows people's minds. So think about this. Throughout 2009, 2010, the economy was in a horrible place. I mean, awful. And that's anybody who paid attention to the economy in 2009, 2010. It was awful. And yet the stock market was skyrocketing. Real estate didn't bottom until 2011. And that was, I think, halfway through 2011 or to the back half of 2011. Think about these things for a moment, right? And so this is why somebody like myself is going to continue to be a buyer of stocks throughout 2022, regardless if we have a small recession, a mid-sized recession, or a huge recession, because at the end of the day, I got to take advantage of deals in the market that are, great values over the long term. And just because you're going through economic devastation, unemployment rates climbing, food stamps are going up, all those sorts of things, it doesn't mean the stock market's not going to actually go on a tear during that situation, okay? Now, Walmart just had their worst day since 1987. When we've got to go back to time periods before I was born, that's no bueno, okay? That's no bueno. We're talking about 1987. I was born in 89, man. That's awful. Like for Walmart, I couldn't believe Walmart was down double-digit percentage. For most stocks in the market, like double-digit percentage, big deal. For Walmart, Walmart's supposed to be one of the safest companies in the world to invest in. Like if you were to put a list together of safest stocks you could possibly buy, the first companies that would usually come to mind are Coca-Cola, Pepsi, Walmart, Procter & Gamble, Johnson & Johnson. Like it usually starts with those sorts of companies and then it goes from there. That's like ask any investor just off top of their head, that's the stocks they would go to, okay? And here we are in a moment where Walmart just had its worst day since 1987. Guys, there's their worst miss since 1992. Inventory was up 32%. Now, some people that maybe aren't from the retail industry are like, what's the big deal about inventory being up 32%, okay? The former Walmart CEO went on Fast Money, and he said, if you were at 8%, that'd be really, really bad. If you were at 15%, you'd be like, oh my gosh, this is awful. He said 32% inventory up, that's apocalyptic. That's his exact words. That's the former CEO of Walmart. He said inventory up 32% is apocalyptic. That's the type of number you look at and you're like, what just happened, okay? And this is flip and flapjack in Walmart, right? I mean, the average customer of Walmart, a typical Walmart shopper is a 59-year-old white suburban woman earning $80,000 a year, okay? And you got to ask yourself, what are we? We're just a bunch of 59-year-old white suburban women making $80,000 a year, okay? No, but in all seriousness, the average income of somebody that shops at Walmart is like 70, 80K, right? And obviously folks that make way less than 70 or 80K shop at Walmart, and people that even make more money than that shop at Walmart. The United States of America shops at Walmart, okay? That's who shops at Walmart. And so if you're talking about a company like Walmart having that big of a miss, the biggest miss since 1992, that means their business is not in a good place. And if Walmart's not in a good place, can we necessarily say the United States of America is in a good place, right, with the consumer? So this is the type of things that you got to look at, and you got to be worrisome. And obviously, Walmart is bigger than just the United States of America. Obviously, Walmart does business in all types of countries, right? But let's be honest. What's the biggest market for Walmart? It's the United States. And so we're talking about they've got 3,500 super centers in the United States of America. A company doing $555 billion in sales last year. And we're talking about just an absolutely apocalyptic number, right? We just got news that Netflix just cut 150 jobs. You know, the number is not necessarily huge, but when you look at like a cut like this, right? You got to think to yourself, is this just one of many cuts coming? Because what you'll see many times is companies end up having rounds of layoffs where it starts with 150 and then all of a sudden it's like 2,000 jobs are cut. And then all of a sudden it's like another 750 jobs are cut. Sometimes, and especially if the numbers get worse and worse for a company, you have rounds of layoffs and it's another round, and it's like, holy smokes, man, when do these rounds of layoffs ever end? Oh my gosh, right? And a company like Netflix has to do that because the numbers aren't there for Netflix, right? They're not there. The stock price is tanking. The stock price is down 68% year to date. And so they have to do something, right? And so they're like, shoot, man, we got to do something. Like the subscriber numbers aren't there. We've got to cut employees. We got to cut salaries. We got to get this business more profitable, right? And you have to make very hard decisions if you're a company like Netflix. We heard about this about a week ago or so. Facebook freezing hiring? What in the world? Are you kidding me? You know, they've been on a hiring insanity binge for like years now. Guys, Facebook, Netflix. Say what you want about Facebook and Netflix, but those are factually two of the strongest companies in the world. Not the United States of America, in the world. And that's factual, not opinion. And if companies like that have to cut jobs or hiring freezing, you got to understand, we're about to go through a massive 6 to 12 month span of layoffs, essentially. When you got worries at those sorts of companies, I'm telling you, that's going to go way further. You know who else? There's rumors, and a lot of these things go behind closed doors, but they end up coming out, right? What happens behind closed doors ends up coming out. And from what we heard, Amazon is now saying that they've way overhired because essentially they were trying to stockpile workers because their revenue growth was like 30, 40%. Now all of a sudden their revenue growth is like, and all of a sudden they're like, we way overhired, okay? And so don't be surprised if Amazon ends up going on a hiatus from essentially hiring, right? Robinhood, this just came out a few weeks ago. Robinhood's to lay off 9% of their full-time employees. If the market doesn't come back in any substantial way and the market continues to deteriorate, let's just say that happens, and who knows if that happens, right? I could see a situation where the market strengthens in the back half this year. I can also see, if we talk about a lot of layoffs and something like that, I could see a situation where the market continues to be not in the best place for several months, right? And so with a company like Robinhood, they lay off 9%. If the market got substantially worse from here, there's going to be more layoffs coming from them with how competitive that industry is. And if you're talking about the money's not there, and when you take into account how much money they've made from crypto, and if crypto's not in a good place, oh my gosh, and we've never even seen crypto. This is the thing. We've never seen crypto go through a recession, a real recession. Technically they went through the 2020 recession, but come on, right? And so we don't know how crypto is going to react in that sort of situation. Maybe it does great. Maybe it holds up better in the stock market. Maybe it does way worse. No one really knows, right? Because we haven't seen it. Can't go back throughout history and be like, this is how Bitcoin held up. This is how Ethereum held up. So we don't know. That's a big, big wild card there, right? Coinbase to slow hiring amid plunge in cryptocurrencies and tech stocks. Bitcoin's around 30K. It hasn't even really had necessarily like a huge drop. It's not like there's been some colossal, massive drop in Bitcoin price, right? Bitcoin's at 30K. for Bitcoin, this actually hasn't been that big of a drop. Like, Bitcoin's been through several like 70, 80, 90% type drops before. What if we get that? What's Coinbase going to do? If anything, and remember, Coinbase was talking about tripling their staff, tripling their headcount. Now all of a sudden they're like, I don't even know if we're going to, double it. I don't even know if we're going to hire more people than fire people now. This is how fast it happens. This is how fast it happens, where it's like, we're going to triple our headcount to like, maybe only double, maybe less than double, to all of a sudden, we actually got to let some staff go. Especially with how competitive that space is. If Bitcoin starts to roar again and Ethereum and the cryptos, hey, then they're fine, right? They'll make it. They'll be just fine. But if Bitcoin all of a sudden falls to 20K, if Ethereum falls to 1,600, 1,500, these companies could go from not just hiring freezes, but to layoffs. And the ones that already are doing layoffs will do more and more layoffs, right? All right. And so this is a situation that we're seeing play out right in front of ourselves, right? But I'm telling you guys, all that's just the tip of the iceberg. It's just the tip of the iceberg when it comes to this, okay? It's like this little thing right here, okay? All this Netflix and Facebook and all that stuff. And that's pretty bad, and that's pretty worrisome, and what if it gets worse, right? But it's just the tip of the iceberg, right? Just the tip of the iceberg. So the U.S. 10-year Treasury is been on a tear for about the last 18 months or so. The U.S. Treasury went from August of 2020, the U.S. Treasury was 0.56 to today, the U.S. Treasury is almost 3%, right? So from 0.56 to almost 3%. The Treasury has been going insane. Now, the Treasury moves mortgage rates, right? And you can say the Fed moves the 10-year Treasury. Like all these things end up moving each other around, okay? And so if you're in an environment where the 10-year Treasury is skyrocketing, more than likely mortgage rates are going to skyrocket. If you're in an environment where the Fed's raising rates like crazy, guess what? More than likely the 10-year is going to go up. More than likely mortgage rates are going to go up. All these things end up affecting each other essentially at the end of the day. And so we're in this environment now where the 10-year Treasury is going beast mode, and mortgage rates are going absolutely insane. National average now is 5.57. That's national average, all right? Now, here's the deal. We're going over 6 very shortly for average. Then we're probably hitting 7, maybe by the end of the summer. When you go from mortgage rates at 2% something on average to 6 to 7% by the end of the summer, I'm telling you guys, that is going to wreck housing. If you don't think that's going to wreck construction and housing, you're sorely mistaken. And remember, everybody looks at housing and they say, well, it's been really healthy and things like that. It lags. It lags big time. It lags big time. It always lags the market historically. When I say the market, I'm talking about the stock market. And housing always holds up as long as people have jobs, right? That's always been the thing. As long as people have jobs, they can pay that mortgage, they can pay that rent. They don't have to get in any bad financial situation, right? Well, if all of a sudden you talk about, people losing jobs and then some of these companies not hiring, all of a sudden you can't pay that mortgage and you have to potentially foreclose or sell that property, short sell, and then you start having kind of like a panic build in the market. And if you're talking about simultaneously all that's playing out while mortgage rates are 7, 8%, no one's out there buying those properties. That's just no way. There's just no way that if mortgage rates are 7% and you got all these properties flooding the market, people are like, I'm going to go out and buy a property. And so this is why I think starting in the back half of this year, I think real estate's going to weaken substantially. It's already starting to play out, but I think it's like tip of the iceberg stuff compared to what's about to play out. Real estate could potentially, this year for me is all about buying stocks. Maybe 23 is more of a real estate year, especially in the back half of 23, based upon what I think is going to happen to pricing. And if mortgage rates are still substantially high, it's going to be ugly here, okay? Now, there's this house getting built across from me. That's probably a $3 or $4 million house there, right? And every day I see those guys. There's 5 to 15 guys out there working on that house, right? And, all those guys got jobs because that house is being built, right? And that's just one of massive amounts of homes being built here in Las Vegas right now. And out in Phoenix, Arizona, where I have another house, imagine how many of these homes are being built right now with 5 to 15 construction workers on them. And it's great. All these folks have jobs. I don't know what this guy's making. Maybe he's making $50K a year, $60K a year, $70K a year. I don't know, okay? If we're going to talk about real estate drying up, which it more than likely is in the back half of this year and especially into 2023, this guy's he doesn't have a job anymore, unfortunately. And all his other guys that work with him don't have jobs anymore. And so all of a sudden they're stuck in a situation where they're jobless, right? And that's a situation that gets worse and worse and worse. And so if this guy all of a sudden has his mortgage, he can't pay that mortgage anymore. And he's got to move in with somebody else, right? Or try to find another job. Well, guess what? In a recessionary environment, it's freaking hard to get another job, right? Recently, we've had this incredible jobs market where it's like you could get fired, you could quit. It doesn't matter. It's so easy to get another job because there's jobs everywhere, right? In a recessionary environment, and somebody that came up in that recessionary environment, right? When I entered the workforce, dude, you're lucky if you can get a job. You got to take whatever you can get. My first job was cleaning dishes at Einstein Bagels. And then from there, my come-up job was working at Walgreens, making $8.25 an hour. I took what I could get, right? And from there, my next come-up job was Quick Trip, making $40K a year. And that was at the end of 2010, right? And so when you're in a recessionary environment, you take what you can get, but sometimes you can't get anything. And then next thing you know, it's like a snowball rolling the wrong way and the dominoes falling the wrong way. And when the economy is expanding and companies are hiring and all these things are going great, it just keeps pushing everything, right? But all of a sudden you're in this situation where construction, that is the iceberg. These guys working on these homes, they are the economy, okay? The guys that are all these construction jobs, they are the economy. They are the economy. The ones that are building the new retail locations because they're expanding and the new restaurants and all this work that's been out there recently, these guys are the economy. They are what drives this whole show. And when that dries up, right? When real estate dries up, when commercial real estate dries up, when all these, new retail centers and things like that, when all that dries up, those jobs go away and they go away quickly, okay? And I'll give you an example. My dad is in the pool business, right? And has been in the pool business since the 90s. And, it was interesting in the last recession, he always complained about how many, construction guys had gotten into the pool business essentially because they couldn't get any construction work building homes or whatever. And so they entered the pool business because they needed to make money somehow. So like, I'm going to, start a little pool business and start cleaning pools. And they would charge really, they would undercut competition and things like that because they just need to make some money. And recently, my dad says, those guys aren't out there anymore. They're all back at their construction jobs. They've been for the last several years because real estate's been really good. Construction's been great, right? But all of a sudden, if, home buyers dry up, which is going to happen, those construction jobs start going away more and more and more and more. And it just kind of leads to this bad snowball effect, right? And sometimes those sorts of guys might not even show up on some of the unemployment numbers and things like that for a while. They're not even accounted for, right? Or maybe they still get some work, so they're maybe not technically laid off, but instead of making, let's say $1,000 a week or $1,500 a week, now they're making $500 a week, $700 a week. That's when it starts getting ugly, and that's when folks that maybe had homes or rents or whatever, right? They start moving in with relatives. That's what happens. My generation, the millennial generation, a lot of folks laughed at us because a lot of folks in the millennial generation didn't move out of their parents till 25, 30 years old, if not over 30, right? And it was kind of like the folks that couldn't move out. And that's what happens when you're in a really rough economy. So the biggest question in this whole situation is how bad will it get? That's all it comes down to is how bad will it get? But I can tell you, it's not sitting pretty. And when you add up all these things, we're going to have a lot of layoffs over the next 6 to 12 months. And, the peak could probably be in 2023, the peak. And the Fed's not coming to the savior right now. And so that's kind of a rough situation. But like I said, in regards to stocks specifically, you have to buy stocks into that weakness. That's something we have seen throughout time. So anyways, guys, hope you enjoyed this video. I got to deliver what I'm seeing out there, regardless if it's good, bad, or anything in between. Much love. Hope you appreciate this. And also, if you ever want to say hi to me on Instagram, my Instagram's linked in the description area. Feel free to send me a DM, say hello. I'll say hello back, and have a great day.